How's it going, everyone? It's Sam. I want to talk to you today about Bill Ackman and his portfolio. We did a video just about, 5 or 6 days ago, and a lot of people wanted to see what stock he was most bullish on, and he's gotten a lot of news recently on him. Specifically, he's been in the news a lot for a couple different reasons. First of all, he made billions of dollars off of millions of dollars by using credit default swaps during the pandemic. He was able to 100x his money or something like that in a very short amount of time. So he used that as a hedge against the rest of the stocks in his portfolio, was able to actually not lose that much money during the pandemic. The other thing is he has the largest SPAC in the world. He was able to raise $4.5 billion worth of money without even having a target company for his company to acquire. So a lot of people hold him in very high regard, and I think he's a really bright guy, but I wanted to take a look deeper into his portfolio, look at his past performance, and see what we can see about the companies moving forward. And maybe you want to buy his ETF. So we're going to break that down and take a look at his companies overall and how he's been able to outperform the market. So if you guys like this, please leave a thumbs up. I appreciate it. If you're wondering why I'm wearing the same shirt as my video yesterday, it's because I'm recording on the same day. I have tomorrow off, but money never sleeps. So I wanted to pre-record a video for you guys. Now, if you guys like that, you can definitely hit subscribe. I do videos every single day. We have not missed a day, I think, since May, maybe. But we do 1 or 2 videos a day. Also, if you guys want to be able to get 8.6% APY on your accounts, I have a link down there to BlockFi. I'm going to do a video on them soon. I have it already recorded, but they're an affiliate of mine that I just started with. I have some of my money there. And if you want to hear more about the company, be on the lookout for that future video. Otherwise, you can do your research on your own right now. But I have noticed that Andre Jick is also an affiliate of this company, and he has about 1 million followers on YouTube. So when they reached out to me, I definitely wanted to check it out. So take a look at that company down below. There's a link down there. Also, check out the link to WeBull. You can get 4 free stocks if you deposit $100. So I really appreciate that too. It really helps out the channel. So we are looking at Pershing Square Holdings, Bill Ackman's company. So honestly, this is not as easy to find out as ARK Invest. That's another mutual fund ETF company that I look at regularly, but they are a lot more open, I think, to their positions and changing positions, because they literally will show you every day what they bought and sold. This company is a little bit different. So you can take a look at their year-to-date returns right now. They're up 66.1% year-to-date. That's really good. I mean, it's not ARK Invest good, where they're up, I believe, 150% year-to-date, but it still beats the general market. You can see it over on the right side. Last year, they had a 58% rate of return, but they did not have great returns before that. So 2018 negative a little bit. Now, I will say they were positive a good amount before the last quarter. If you remember, December 2018 was pretty rough. Then you can see year-to-date return 2017, negative 4%, not great. Year-to-date 2016, negative 13.5%, not good. Negative 20.5%, 2015. And then 2014, they had a pretty good year. So they're kind of hit or miss right now. They've definitely had some off years, but they've seemed to turn it around recently. And like I said, a lot of people feel very strongly about Bill Ackman and about his company. Now, just taking a look at some of the key information for his funds. Now, this is something that I like looking at whenever I'm thinking about maybe investing in a mutual fund or an ETF or something like that. I like to take a look at the management fees and some of the other fees associated. So they have a 0.48% fee on portfolio transaction costs. So this is a charge that they're giving you for the buying and selling underlying investments for the product. So that's pretty high. And again, I'll show you some of the stocks in a second that they own. But with these ETFs, they usually bury some information, or bury some fees in there. This seems like one of those that they're charging you for buying and selling underlying investments. They're also charging 2.42% as a management fee payable to the manager in the fees and expenses of the company's other service providers. 2.4% is high. And then performance fees, the impact of the variable performance fee payable to the manager equal to a maximum 16% of any gains. This seems very high. So even if you just account for these two fees, it's 2.9%. That's too high for for my liking. They don't have any required hold. They don't have any upfront entry costs or exit costs. But that seems really high, almost 3% in fees. Now, taking a look at their companies, they only hold 10 companies. They hold a lot of blue chip companies, a lot of restaurant companies, and I think it would be pretty easy to buy these yourself. So they hold Restaurant Brands International. They own Burger King, Tim Hortons, Popeyes, companies like that. They own Agilent Technologies, Chipotle, Lowe's, Starbucks, Hilton, Pershing Square Tontine Holdings, which is PSTH, a company that I own, Howard Hughes, Fannie Mae, and Freddie Mac. So the only ones I don't know on this list off the top of my head, Agilent. They're an analytical instrument development and manufacturing company. So this company actually has pretty good increased revenues over the last couple of years. You can see here 4.2 to 4.4 to 4.9, 5.1, 5.3. So a pretty steady gainer there of about 5% revenues a year, something like that. Also, Howard Hughes was one that I just had to look up. They're a major real estate development and management company based out of Texas. Now, this is a company that's still down a lot. You can see here they have not recovered in the least. They're down 37% year to date. So overall, they have a very easy to follow portfolio. Now, if you want to pay for them to be able to allocate the funds for you so you don't have to go and buy these companies, or you can buy this company so that they can weight it differently. But in my mind, it's not worth buying this company. That's 3% that you have to pay a year just to be able to buy these 10 companies. Now, I talked about Fannie Mae and Freddie Mac in a previous video. Bill Ackman said that was his top company next year, or his two top companies. He thought there was going to be a turnaround. A lot of these other companies are just blue chip companies. They're dividend payers. They are still, some of them are hit hard still, like Hilton, like Howard Hughes. Freddie Mac, Fannie Mae also hit hard. A lot of the restaurants, though, did quite well. But honestly, this portfolio is not what I thought. And I think those default swaps were what made them have a pretty good year to date return, because like I said, they made $2 to $3 billion, I believe, and they have about $11 billion of assets under management or so. So that made a huge difference. And they also had some of these restaurants and Starbucks, these companies like Lowe's that have done really well this year. If you want to invest like Bill Ackman, you could definitely do that without buying Pershing Square Holdings. I think you can just do it yourself if you really want to. This ETF or mutual fund does not wow me by any means. It's not like ARK ETFs where they have 30 to 50 companies. They're innovative. They're new companies that you've never heard of. I just did a video yesterday on one of their companies that they just bought that was a recent IPO that I had never even heard of, but has a huge addressable market, is growing quickly. So I think it's very different, but I did want to hit on some of the companies that they own, because I know it is hard to figure out what they own because it's not as easy to find as ARK Invest. So thank you guys so much for watching. I appreciate it. If you want to see the video on Freddie Mac and Fannie Mae, I'll put it up on the end screen. Again, he's pretty bullish on it. Also, I'll put up the video from yesterday right down here on ARK Invest in their new IPO company. Thank you guys so much. I appreciate it. Thank you for checking out BlockFi and WeBull, and hit the like button, and I will see you in the next video. Bye.